Welcome to Digital Asset News. Take the top stories in cryptocurrency digital assets and break it down to bite-sized pieces. Today, just a couple of stories. Here's why Bitcoin price just spiked to $7,300 and liquidated $90 million. Also, CZ Binance states they have the users as he explains why he bought CoinMarketCap, which is going to lead us into today's prime story, which is what is Bidao? We'll go over this at the very end. Let's jump into today's story. So first up, here's why Bitcoin price just spiked. This is interesting to me because I did not see this one coming. I am not a big believer that right now that any market would rally, but I was wrong again. Bitcoin price spiked from $6,900 to $7,300 across major crypto exchanges, liquidating $90 million on BitMEX and Bitfinex alone. So if you're a trader, let me know in the comment section, did you get liquidated today like everybody else? While several traders anticipated the Bitcoin price to see a strong upsurge as it breaks out of the $6,900 resistance level, the abrupt upsurge to $7,300 caught many TA, technical analysts, off guard. Bitcoin price is often susceptible to large downside movements, as seen on March 12th when the price dropped to $3,600. But Bitcoin tends to see overextended price movements because of the concentration of its volume in the futures market. And this is just exactly what happened. The futures market came in and just took a big bite of everything. According to data from Bitwise, the variable 24-hour spot volume of Bitcoin was estimated to be around 1.5 billion, but BitMEX had 2.9 billion in the last 24 hours. BitMEX is a monster, and they are just swallowing up traders left and right, unfortunately. And that's with Binance Futures, OKX, Huobi, Bybit, and Darebit also seeing high volumes across top crypto, including Bitcoin and Ethereum. On the futures exchanges, traders typically use leverage ranging from 1x to 125x, essentially trading with borrowed funds. Leverage trading leaves the market vulnerable to extreme price swings as they lead long contracts and short contracts to be liquidated in short periods of time. So essentially, you can make a lot of money or you could lose a lot of money, and 95% of the time, people are losing. So if you're out there trading, good luck to you, but I don't recommend it. I think it's a bad decision. Prior to the drop, the majority of traders in the crypto market were longing Bitcoin. The steady increase in buying demand started to squeeze Bitcoin shorts, forcing traders to market buy and adjust their positions. The squeeze continued on past $7,000, bringing the price of Bitcoin to $7,300 in quick succession. And then ask the question, if short liquidation was the main reason, isn't it a bearish retest? And they state, had the entire move been triggered by a cascade of short liquidations from low levels, it would make a solid case for a short-term bearish retest. But since late March, the gradual increase in the price of Bitcoin since low sixes has primarily been led by growing spot volume and demand. And remember, the high today was 7,300. Right now, it is decreasing, and we're seeing 67.65, 67.64. and on down it goes. So hopefully you didn't take a look at this and FOMO in like a lot of people do and try to buy in as it's going up, because then you just lost like $600. And that's a problem. But let me know what you think. Put in the comment section below. Do you like to trade or dollar cost average like me? Moving on. They have the users. Binance CEO explains why he bought CoinMarketCap. So I've already covered this yesterday, but just so you know, Binance is on a tear. They just acquired CoinMarketCap for $400 million. And I thought this was it's a master stroke of a move. Amazon's Alexa ranks CoinMarketCap as the 570th most visited website globally in the last 90 days. That's compared to Binance and rival exchange Coinbase at 1688 and 1562. Next closest data provider is CoinGecko, whatever. It doesn't matter. What matters is that anybody who's in marketing or sales, mostly marketing, they know that you go where the eyeballs are. So if you have, I don't know, how much was it? 2 million or 21 million? I forgot how many it was that actually go to CoinMarketCap per month. Per month. Millions of people go to CoinMarketCap per month. If Binance buys that website, imagine what they can do to push people to their platform. And of course, they say they're not going to do that. But let me tell you right now, every company that I've ever seen or worked for is always looking for that competitive edge to put them into the number one spot. And Binance is already there, but when you're in the number one spot, it's very easy to tumble back down. And they know that they have to make big moves to make sure they stay there and grow their brand. So they're going to by the biggest and the best, and they're going to put their information out there to funnel people right to their exchange. Beautiful move. Hats off to them. And that's not it. Because remember, they had the recent acquisitions of DapperView, which is a leading decentralized app platform. They also had an acquisition of India's WazirX, which is the largest Indian exchange. And this was another beautiful move because as of 2 months ago, cryptocurrency and digital asset trading or owning it was banned in India. So when I saw that they had purchased or they had gone ahead and just acquired WazirX, I'm like, why? You can't even do anything in India. Well, guess what happened 2 weeks ago? They lifted the entire ban. So you have 1 billion plus people that now essentially belong to Binance because they did a great move of buying the largest cryptocurrency exchange located in India. Unbelievable. And of course, Binance is also the largest crypto exchange in the world by visitors. So morphing this all into one story, let's talk about Bidao, which will be using the Binance chain BNB token for DeFi. And like I said, this is just one more feather in the cap for Binance. So before we get into what Bidao is, let's talk about what's DeFi and what is a stablecoin. Because we need to know these two terms before we move on to Bidao, and it'll all make sense in a bit. So let's talk about it. What's DeFi, what's a stablecoin, and what's Bidao? So just imagine this. Imagine being able to take every financial service of traditional markets that you use right now, today, but you have it in a global, open, and decentralized alternative. What that essentially means is that there's going to be no middleman. There's going to be no banks. There's going to be nothing really in your way to get the thing that you want to do or need to do financially. So that could be anything. That could be anything that you think about right now that you use, like banking, checking, savings, those types of accounts. Loans, we know how much those are awful to go through. A lot of different hoops you have to jump through, credit scores, paperwork, time, and all that stuff. Trading, which is something that we do right now in cryptocurrency and digital assets, but wouldn't it be nice if we could have an open style platform, decentralized, and be able to trade the things that we actually want to trade from what would be like a traditional type of trading and also cryptocurrencies, as well as investing. And when I'm talking about investing, I'm talking about specific things that we see right now in traditional markets that are going to cross over into the cryptocurrency hemisphere. Here's what I'm talking about. Okay, so here we have one of my favorite graphical representations of all the money in the world. And when we talked about what DeFi is and how it's going to replace banking, lending, investing, take a look at where all these money or all the currency is actually stored into, and how decentralized finance could take a big chunk of that as time progresses. So I just want you to note that each one of these squares right here represents 100 billion. And this was actually written in 2015. So things have increased, I will say. Bitcoin, it has a very small square. Actually, it's roughly about 180 billion as of today. It's April 2nd. It's around 6:30 at night. Bitcoin was actually smaller than silver. Then you got the three biggest people, Warren Buffett, Bill Gates, Carlos Slim. They all have about 100 billion. Okay. So we got the big companies here. Here's the Fed's balance sheet. This is at 4.5 trillion. That's going to jump up by at least 6 trillion after the coronavirus issue and the stimulus package that was just released by President Donald Trump. So that's going to double, maybe triple, maybe quadruple. Don't know. It's going to be a lot of debt though. Now look at coins and banknotes. Coins and banknotes. And this goes down to the banking DeFi that we talked about. So the total value of all the world's coins and banknotes is roughly 5 trillion. Commercial real estate, 7.6 trillion. Gold, 7.8 trillion. Now, when we're talking about DeFi, I don't expect DeFi to break into gold. I expect Bitcoin to break into gold and take a piece of that pie because it is a good store of value. But as far as DeFi, maybe not really. Then we take a look at narrow money. Narrow money includes world's coins, banknotes, and checking deposits, and that is 28.6 trillion. Now take a look at the stock market. We're looking globally at around $70 trillion. That's a lot of money. That's a lot of money that DeFi could really break into, but that's not even the tip of the pie, or the tip of the iceberg, tip of the pie. And then we have broad money, which is banknotes, money market accounts, as well as savings, checking, and time deposits. So again, another nice little piece, but really not that big. And then how about global debt? We're looking at 200 trillion. This was in 2015. We are 5 years ahead of that. I can guarantee it's at least 250 trillion. But again, not even the big thing. The big thing is right here. It's called the derivatives. Now, derivatives on the low end is 630 trillion. on the high end is 1.2 quadrillion. So what are derivatives? Derivatives are futures contracts, CDOs, collateralized debt obligations, swaps, etc. They are essentially betting on the financial future, if what's going to go up, what's going to go down, what is happening behind the scenes. And this, I believe, is where DeFi is going to make the biggest hit. Now remember, every one of these squares was $100 billion. And this right here, where it goes from blue to black, this is the minimum where they think the derivative stops, but actually they have no idea. And if they keep going, and we take a look at all the way to the end, this is the 1.2 quadrillion. So when we talk about all those things that DeFi can make a dent into, banking, investing, loans, and trading, do you think that DeFi could make a big dent, or take at least, how about even a small piece of the pie here, to really make a future for itself? I believe it can. Let's go back. Okay, so that is essentially what is DeFi, decentralized finance. And it's just pretty much taking what you think as traditional type of banking, loans, investing, and putting them on the blockchain in a decentralized manner. So that's the first part. The second part we need to go over is, what's a stablecoin? So a stablecoin is a price stable crypto that is pegged to another stable asset. What am I talking about? Well, there's really two types. There's fiat-collateralized and crypto-collateralized. And this means that if you're talking about a fiat-collateralized stablecoin, essentially you will send $1 to get one stablecoin. And it's pretty simple. If you want your money back, or your fiat back, after you've gone and got your stablecoin, you send in your crypto, it gets destroyed, and you get wired your fiat back. So it's pretty much a one-for-one, pretty simple, easy type of thing. And you can see those things in like USD Coin, TUSD, Paxos, and Tether, and all the advantages and disadvantages of those. So what I like to see as far as like fiat collateralized pros, or what would be considered like something that is actually a good aspect of these, is that it's super simple. You don't have to pre-qualify. You don't have to go somewhere and fill out some paperwork and have them pull your credit report. You can just get whatever you need as long as you have the collateral asset. It's stable. It's pretty much all the time, pegged to the US dollar. So as long as the dollar is stable, and that's debatable for another video, then your collateralized stablecoin will be essentially very stable. And there's no hacks because it's not stored in the blockchain. You send in your dollar, you get your stablecoin, easy peasy. So that's the pros. Now the cons of having a fiat collateralized stablecoin, it's very centralized. Wherever you send your dollars in, it stays in a safe, in a vault, some kind of centralized location. That must have to have auditors in place, because you don't want to have a situation where someone just printing money. We know how dangerous that can be, even though the U.S. government and governments around the world seem to do that without any regard. In this space, we are not supposed to do that, and that is a good thing. So you're going to have auditors there that are going to say, look, you can't send out 1 billion worth of Tether unless you have $1 billion to collateralize that. So that's what the auditors are there for. And it's regulated. You're going to have these auditors there. It's going to be a very lock and key type of situation, and they're going to have checks and balances. So that's a bummer. It's a bummer for speed, but it's a good thing as far as like scams and whatnot. So got it. So how about this? Crypto-collateralized stablecoin. Now this is a different part of this, the flip side of the same coin. So crypto-collateralized stablecoins, they are backed by another cryptocurrency. And usually with this, you have to have a collateralization ratio of 1.5 to 1, meaning because of the volatile aspect of digital assets and cryptocurrencies, you cannot just put up one Ethereum. Let's say Ethereum is $100. You can't put up one Ethereum for $100 and get $100 back to you because of the volatility. So usually you have to over collateralize at 1.5 to 2.5 to make sure that you are able to actually pay off that debt. And one of the most common crypto-collateralized stablecoin would be MakerDAO. And MakerDAO has their own stablecoin, which is called the DAI. So this is collateralized with Ethereum only. They are trying to move off into a multi-chain to where they would use other types of cryptocurrency digital assets. But right now, it's Ethereum, which means that it's an Ethereum ERC20 token. So the pros of this, of using a crypto-collateralized stablecoin, is that it is decentralized. It's an open source. You can liquidate quick and cheap and get your money back if you need to. It is transparent. It is open to everybody, where as opposed to your fiat-backed stablecoin is really not. It's just in a bunker somewhere, and you have to just kind of take their word for it. And you don't have to pre-qualify for crypto-collateralized stablecoins. As long as you have the collateralization, you're able to open a position and just go that way. So the cons is that there's a problem with the price instability, which is what I talked about a little bit ago. You cannot just have Ethereum. Like I said, if it's $100, you cannot get $100 for Ethereum. It's usually 1.5 to 2, so you have to over collateralize, which is a big problem. Then another thing is that because of the volatility, let's say that you put up let's say you put up 2 of your Ethereum, and they're worth $100. So now you have $200. You get out $100 essentially worth of a collateralized asset. Now, what would happen then if Ethereum, this just happened March 12th, where it crashes, some 45 to 50%. Well, what's going to happen is that you're going to get liquidated, and all those assets that you put to be collateralized becomes liquidated. You can still hang on to what you have as far as like the stablecoin, but the assets that you put in for collateral are all gone, and that is a problem with the price crash. Also, it's tied to the health of that crypto. So if Ethereum starts to suffer, in this case MakerDAO, then of course, your positions will suffer. And it's an inefficient use of your money because you have to over collateralize, which is a big problem. Usually 1 to 5 or 1.5 to 2.5. And if you looked at the MakerDAO and how it all works, which we're going to do in a bit, it's very complex. It's very tough. It took me a good day to figure all this out, and I had to do a lot of research just to see what the heck they were talking about. But it is interesting how they did it, and we're going to go over that right now. So, why would you use a crypto-collateralized stablecoin? What is the point of that? Well, if you believe crypto will go up, but you don't want to liquidate, then you can put it into some type of service like MakerDAO. So let's say, for instance, you have Ethereum right now, and let's say Ethereum is $100, and you are just sure that it's going to go up to $200 or $300. So what you could really do is you could take this Ethereum, put it into MakerDAO. They would give you a stable coin for, let's say you put in all $300 or all 300, or let's say, it's $100 worth of Ethereum. You put it in and you take out $50 and you get that DAI. Now you're able to take that money and you're able to put that into half of an Ethereum. Let's say Ethereum goes up by 2x, 3x, 4x, 5x, which we've seen in the past. Well, what happens? Well, you can take out that Ethereum that you put essentially in escrow, and you can say, look, I put that in when it was worth $100. I'm going to pay that now at $100 and get it back, even though it's actually worth $400 or $500, 3-4 weeks later. And I'm going to pay back my original debt. No big deal. And that's essentially what could happen. So if you believe the crypto will go up, you can essentially leverage your position and go that route. Here's another example. Let's say you have to pay for taxes and you have a strong belief that Ethereum, in this case Ethereum, is going to go up greatly. So you need to have money or cash on hand. You don't want to liquidate this asset, so you can put it into collateral and maybe let it sit there for 6 months to a year while you pay everything back, because you don't want this to become liquidated and you want to have the gains that it happens over time. If that happens, great. If it doesn't, then it's a problem, like we just talked about before. Another thing is, what about capital gains tax? So if you're looking at investing in cryptocurrency digital assets, capital gains tax can come and hit you very hard. So anything before 1 year's time, if you take out profits, you're going to get hit with the most capital gains tax. And depending where you're at, you're looking at between 20 and 37%. 15% would be on the low end if you were going out after 1 year. So if you want to try to avoid those things, well, you won't get hit on that if you take it out in cryptocurrency. So we put our Ethereum in, we get back out our stablecoin, which is a cryptocurrency. We do not pay that capital gains tax. Now, later down the road, if you have to take it out at some point, you're going to have to pay at some type of capital gains tax. But the more that you can spread these things out, hopefully after a year, then you'll be better for it, not to pay so much taxes. And then lastly, like we talked about, you can leverage your crypto, which is what I just said essentially, which is put the Ethereum in, wait for a while, or take some money out, wait for a while, then buy back in. So let's take a look at an example. So let's just say this is the old way of instead of decentralized finance, just finance. Let's say you have your home, and your home is worth $100,000, and you want to do a home equity loan. So you want to do a home equity loan, and you want to take out, let's say 50%. So you want to say, I want to take out $50,000. So what do you have to do? Well, that's your collateral. That's your house. So you march yourself to the bank, and you say, bank, I'm here. I want to do this. I want to take out $50,000. They're going to run a background check or a credit check. They're going to have you fill out some paperwork. They're going to make you wait for a while, and they're going to approve or deny, which is a real pain. But if you need that immediately, it's not going to happen. So you're going to have to wait, and that's just how it is. Now, when the bank comes back and graciously says, yes, we will do that, then they will give you your money and pay out. Problem with this is, what's the interest rate going to be? Could be anything from, 4.5%, 9%, somewhere around there. And then when you pay back on the amortization table, well, if you pay it back over 10 years, 8 to 10 years, and the $50,000 that you actually got back, you're actually going to look at around 80, 90,000, somewhere around there. So that's a problem. That's a big problem. And that is the old world of finance. Now let's compare that to decentralized finance. So let's say we have Ethereum. We bought Ethereum in 2016, and we got it for super cheap. And we have, let's say, 100 Ethereum. Okay. And 100 Ethereum, and they are going for, let's say $10 at this point. So we have $1,000 worth of Ethereum. So what we're going to do is we're going to go to MakerDAO, and we're just going to go to their website, and we're going to just connect our Trezor or our Nano Ledger, and we're going to agree to the terms, and they're going to spit out DAI, which is their stablecoin. So there is no wait, there is no hassles, there is no background check, there's no credit check. Your Ethereum is in the collateral aspect, and you have your DAI. Now remember, it's 1.5 to 2. So if you again had $100 of Ethereum, you're going to get back $50, and you can spend it any way you want to. If the Ethereum appreciates, great, everything works out pretty well. If it depreciates, then we have problems because it can get liquidated. However, like we talked about, there are those pros to it, and it's a lot more streamlined, a lot faster, and in some situations a lot better. So let's take a look at what that would be as far as MakerDAO and how that would look as far as connecting our ledger. Okay, so here we are at cdpmakerdao.com. We're going to take a look at what this actually would look like if you wanted to do a cryptocurrency collateralized debt. So essentially, we are going to look at, there's 4 options. You can use your Coinbase wallet, Trezor, Ledger Nano S, or a MetaMask. I have my Nano. I'm going to click on that, connect it to my computer, and it's going to say unlock your ledger, open it up, verify the contract data, and browse options, blah, blah, blah. Latest firmware. Great. Let me open this up and make sure I'm on Ethereum, and I'm going to click detect. This might take a second or so. And there we are. Now this address, sometimes these addresses are incorrect. What they're really looking for is the legacy address. And sometimes that's just how it is. I've had this for a long time, since 2017. So go for the legacy address. Yeah, that sounds about right. Connect, and let's see if it is. And sure enough, there it is. So on my ledger, I got a whopping 4 Ethereum. Great. And then Sai and Maker, I have 0, obviously. So let's open up a collateralized debt position. So what did we talk about? Let's say I had 4. I want to give up 4 Ethereum. And that is going to be, so for Ethereum, right now, the price is around $140 per Ethereum. So if you look at 4, 460. So we're looking at about 560 total that I could put out, but that's not the case because I have to over collateralize. And actually it's going to tell us, like, look, the max DAI, which is the stable coin available to generate, is only 375 DAI, which would be $375 because I have to over collateralize my position. So if I wanted to max out, sure. Here's the problem though. If I put 375, let's say 374, it's going to tell me the amount of DAI. It says Psi here, but they are upgrading their system to a multi-collateral position. From the Psi, it's going to go Psi to DAI. And this is the problem with cryptocurrency sometimes. There's so many different acronyms and mnemonics, it's just a pain. But that's what it is. So 374, it's going to say the amount of DAI you were trying to generate against the collateral is putting your CDP at risk. So here's the liquidation price. Right now, the price is $140.74. If it drops to $140.25, I could be liquidated. And there's a liquidation penalty of 13%. And that's a problem. So what I would probably do is I would over collateralize and I would put in 4 Ethereum and only take out, about 200 DAI. $200. And what that means is that my position will not get liquidated until Ethereum goes down to $75. I feel comfortable with that. I'm okay with that. So what I could do here, again, I could leverage my position. I could take the 200 Psi or DAI. I could go out and I could buy 1 more Ethereum, wait for it to go up or not, and then pay it all back if I had to. Now the problem with this is, and this is the problem that with some of you gamblers out there, is that this is essentially gambling. And I don't like leverage positions. I hear it all the time in the comment section. I don't like to trade. What I like to do is I dollar cost average in and I try to play it safe as I possibly can in cryptocurrency. And I will just buy $25 to $50 a week of a certain cryptocurrency, usually Ethereum, maybe XRP, maybe Bitcoin, depending. And I will dollar cost average in and out. And I will not sell until we hit the next bull market. Now, if I want to go ahead and trade and do all these leverage positions, I can get wrecked very easily, and you can see why that would happen. However, it is up to you what you do, just not my cup of tea. And that essentially is how it works. Now, if I wanted to collateralize and generate, I would click this button here, and I would be able to send that DAI or that Psi or DAI into my wallet, and that will be it. And I could do whatever I wanted with it. Now I could buy more Ethereum, I could buy Bitcoin, I could buy whatever I want to, or I could send it to Coinbase Pro and just take it out as money, as dollars if I really wanted to. But the thing is, I have to pay this back at some point. And let's see, what is the fee here? Let's take a look at the fee, or the stability fee. This is from Maker Tools, mkr.tools, and you can see today, not too great. This is only April 2nd. The stability fee is 7.5%. Not a great thing. I would not actually do this. But some of you gamblers out there would like to. Let's take a look over 6 months how it was. The stability fee was up at 10% at one point, year to date. 10, 1 year. And let's take a look at all. At some point it was at 20%, the stability fee. And then the lowest part was at 0.5%. Again, if you want to leverage your position, if you want to avoid those capital gains taxes, do all those crazy things, then this might be for you, not for me. So that's it. Let's jump back. So crypto-collateralized MakerDAO. There's actually 2 parts to this that we talked about. There is the stable coin and there is the maker or the governance coin. 2 parts to the puzzle. So the maker coin, here's the upside. Maker coin, this is what makes the interest rate or the stability fee. And that could be anything from 0.5% to 20.5%. And then, of course, the interest keeps the DAI stable. So if we have an interest rate that is rapidly ascending, when you have too much DAI out there. So just think of it as money. When the amount or the total supply of DAI that is out in the world becomes too much, what they want to do is they're going to increase the stability fee or the interest rate because they want those DAI to retract. They want people to pay off their debts as soon as possible because they have too much DAI or too much money out there. Now, if they don't have enough, then they will actually drop the interest rate, so people will want to take out more loans, and they can increase the DAI availability of the stablecoin. So it keeps it in a nice state of equilibrium. When you don't do something like this, then you have hyperinflation. That's what we see with the Fed, which is what is happening right now. Well, excuse me, I wouldn't say that it's actually hyperinflating, but we're going to see inflation. Probably. So maker holders, this is the great thing about them, they get to vote on the fees. They get to say how much it's going to be. And interest is all, or the interest fees are all paid in the maker coin. After this, when it's paid, the percentage of maker is actually burned. So if you are a maker holder, you get to control the purse strings, you get to have the interest fees paid to you, and you get to make the delegation of what is actually going to happen. And of course, when the loan is paid off, the maker, or a percentage of the maker is actually burned. So what's happening here is that you have a deflationary type of coin. And right now there's only roughly around 1 million maker coins out there. And as things get burned off, they can either retract, or they can expand, or they get burned. So there is a nice state of equilibrium. And of course, when I look at this, I think to myself, this is almost like a decentralized reserve bank. They're doing the same thing that the Federal Reserve does. They can take money back, they can destroy it, they can loan out money at near zero interest, which is what is happening right now, or they can loan out. It's kind of a weird thing, but the Federal Reserve is not federal. It's about as federal as Federal Express. So the Federal Reserve and the Treasury, they set monetary policy. And when they put out money, they are actually loaning that money out to the U.S. government at a certain percentage. So every dollar that it essentially gets printed by the Treasury comes with debt. So that's just how it is. And right now there is 0% debt, so that's why you're going to see a lot of borrowing from the government, because they don't have to pay anything back. Well, at least as far as percentage goes. So when I take a look at MakerCoin, I see a decentralized reserve bank. All right, so here's the downside. Should the collateral in the system not be enough to cover the amount of DAI, the decentralized stablecoin lent out, Maker will be created and sold in the market in order to raise additional funds. So it behooves those people, those individuals who own MakerCoin, to make sure that the policy is set correctly and that they actually raise or decrease the percentage rate of the DAI interest. Because if they don't, then they are on the hook to actually either create more or sell more, which will increase or decrease the price of MakerDAO. All right, so we're talking about what's DeFi and what's a stablecoin. We answered both of those. Now we're going to get into what's Bidao. So Bidao, it's crypto-collateralized. It is stable. It's a stable coin. Plus, it is a staking and governance coin, just like the MakerDAO we were just talking about. The difference is that MakerDAO is built on the Ethereum chain. It uses ERC20 tokens. With the Bidao, it is collateralized with the BNB coin, and it is utilizing the Binance chain. So let's break into what actually Bidao is and what the offer is. So, okay, here's Bidao. Here is the website, and there is a token sale going on, and you have 30% staking power, or staking tokens. Great. So let's take a look at what this is all about. So first of all, it says that Bidao was mentioned by the official Binance. Really? Let's take a look. So here, this is through the community.binance.org, and it states the Bidao cryptocurrency, BID, utilizes a completely decentralized proof-of-stake blockchain with an additional collateral-backed value token, which is 100% stable in value, quite in contrast for the Bitcoin, Binance Coin, or Ethereum, which is what we just talked about. So it is a stable coin plus a governance platform. So as a settlement layer, the Bidao system utilizes the Binance chain. This means you can also freely interact with all crypto assets that are running on Binance chain. This is an interesting use case for BNB holders because the supply will be further reduced by locking up some BNB and Bidao. That's good for Binance. And if they can lock up more BNB tokens into the Bidao system, that means that the more coins you have locked up, the less they are. There is a scarcity, then we have a demand. What happens then? Price goes up. So I think they will definitely promote this project, and it looks like they're doing it already. So the BNB, native token of Binance chain, is used as collateral unlike MakerDAO, which uses Ethereum. And the stablecoin, so the stablecoin is called BUY, the governance and staking token is called BID or BID, and BID is the token that is sold during the token sale. That is what we are evaluating right now. Token sale is stakeable, which means you are rewarded by just holding the BID in your wallet. Great. So let's take a look at, first of all, back to the website and who's behind this. So this is the team, these two gentlemen here, and let's just go past this. So trustless USD stablecoin, BNB's collateral, stake your, okay, great, all that good stuff. Here's the awesome team, they say. So there's 4 people in this team. 4 people: Bashan Anger, Brian Condananza, Carolyn Kurpiers, and Zilong Zhang. Great. So you got 4 people for apparently $1 billion company. That's a red flag. Let's take a look here, first of all, at their LinkedIn profile. Bashan Agner. Okay, so here's let's see his experience. So he's a CEO at Bidao, 2008 to present. He's a co-founder of Croco Coding. Okay, it's 5 years, so he's got some experience in business. And he was a developer for about a year at AI and IoT developer. Went to Munich, got something, not much. Okay, so not looking so good, first off. Now you got CTO Brian Condananza. 2018, number 10 top 100 young entrepreneurs in the world. Well, that's pretty good. Let's see what he's got. So this is Brian. So his experience, okay, CTO, Chief Technical Officer, Bidao. 2019 to present. He was an advisor on Beat Token. Beat uses blockchain technology. He was a keynote speaker for TEDx. He was an advisory board member for IDACB, body that unifies the best entrepreneurs, professionals, high-level experts in the major blockchain spheres. Great. And youth assembly delegate. Okay, this kid is young. And just some volunteer experience. Okay, not anything that's blowing me out of the water so far. Who else we got? Carolyn Kurpiers. Let's take a look at her. She's a strategy consultant at Accenture. CMO. Looks like she's working at 2 places. Life Science Strategy Consulting, CMO. Student trainee at Bain & Company. Researcher, research manager team, Sinyo. So, I mean, they've all got some experience, right? And then the last one, Zilong Zhang, from head of Asia, PhD researcher at Duke University, and his is not available. Okay, here's the thing with businesses. You have to get people who are better than you around you. And it looks like they're trying to do those things. It's a very young company. But if I am looking at this as a multi-billion-dollar company, which what I believe DeFi to be, this is not a very impressive team at all. So I know they're young, probably ambitious, but you need more than youth on your side to do things. You need to have those advisors and those people around you to help build your company. Now you can make mistakes, but they don't have to be your mistakes. So get those advisors and those people around you that can actually lead you in the right direction. So right now, red flag. When we're looking at Bidao, one good thing that I did see is that they are integrating with Chainlink to support cryptocurrencies as collateral. So this is what they state on their website. Bidao, a decentralized stablecoin built on Binance Chain, is proud to announce a technical integration with Chainlink. This integration will use Chainlink's secure and reliable price oracles to power the Bidao stablecoin. In the initial iteration, Bidao will use and support ETH, Bitcoin, and Link USD price reference data contract already running live on the mainnet. This will allow us to expand the different types of collateral users can choose when taking out collateralized depositions via the Bidao protocol. And they're actually, in the white paper, which we're going to go over in a bit, they're going to talk about all the different types of cryptocurrencies they can actually use. And they talk about 2 different tokens. We already talked about that. In the initial deployment, Bidao will be completely integrated with Binance Chain, and BNB will be used as the collateral backing collateralized debt positions, or CDPs. In the future, we aim to be a blockchain agnostic DeFi application and integrate, okay, blah, blah, blah. Great. So that's one thing. Let's take a look at the white paper. So the white paper is long, but thankfully I went through it before I did this video and just highlighted the good stuff. So Bidao utilizes decentralized proof of stake blockchain. It's collateral backed, 100% stable. settlement layer. As a settlement layer, the Bidao system utilizes the Binance chain. In the future, Bidao will also be integrated with other blockchains like Ethereum, Tezos, and EOS, the way Bidao becomes the one-stop shop for decentralized finance apps. Great. So what is Bidao? We know what it is. The problem. And remember, every type of cryptocurrency digital asset, you have to ask yourself, what problem are they solving? What's their use case? Do they have a solution? Because there's over 2,000 different assets out there, and most are worthless. So ask yourself, what problem are they solving? So when I see a white paper here, the problem, great. At the moment, it states there is no trustless stablecoin that is blockchain agnostic and allows different crypto assets as collaterals. The only similar system is MakerDAO. But MakerDAO is completely dependent on the Ethereum blockchain and therefore not able to interact frictionless with other crypto assets. And that's true. Right now, they are just Ethereum-based ERC20 token. The solution. Bidao is building a new blockchain system that is dedicated to DeFi. In the beginning, Bidao will be completely integrated with the Binance blockchain, and BNB will be used as the collateral. In the future, also other blockchains will be integrated. Great. So, market. One major problem in most cryptocurrencies is that the prices are highly volatile. To reach mass adoption, a trustless stablecoin will be needed. At the moment, there are many centralized stablecoins like Tether and others. Tether. All these stablecoins share the same weakness. You cannot trust them, and that is true. I mean, Tether had a big problem with overprinting, and they had to have regulators come in, and this happened years ago. Moreover, these stablecoins, and that's debatable. I would just go back because I don't want to hear in the comment section, no, they didn't do that, blah, blah, blah. Debatable. Moreover, these stablecoins are often very intransparent and in general difficult to monitor. Decentralized stablecoins like MakerDAO are just usable on a single platform and too complicated for casual users. It's needed to create an easy-to-use and trustless stablecoin. That's the goal for Bidao. Stablecoins and DeFi are already big markets. The market cap of stablecoins is about $4 billion, and about 450 million USD are currently locked in DeFi apps. Sure. This was probably written a bit ago. Instead of using ETH as collateral and Ethereum as the settlement layer, Bidao uses BNB as collateral and the Binance chain as settlement layer. Using BNB instead of ETH as collateral has multiple advantages for the users. ETH is primarily used to pay for code execution on the Ethereum blockchain. The drawback of this is that ETH is not used as a store of value. Instead of BNB, it's the primary coin of Binance Exchange and Binance DEX. And moreover, BNB is burned regularly, which makes it more attractive for users to hold. BNB chain uses the Byzantine fault tolerance. Great. They use a programming language, a functional paradigm of programming. Big advantage of functional programming is that programmers can easily verify with HOL theorem provers. One such prover is Isabelle. And the reason I talked about this is because that is also what Cardano was doing, functional programming. So there's 3 token architecture. This is the meat and potatoes. BI is the stablecoin, just like DAI is the stablecoin for MakerDAO. BID is the staking and governance coin, just like Maker is the coin for MakerDAO. And then BNB is the collateral, that's the Binance coin, as opposed to Ethereum. So the same type of thing, it's just that instead of having DAI as a stablecoin, you got BI. And instead of having Maker as the staking and governance, you've got BID. And I will just to note that the Maker coin right now, it has gone for as high as $1,440. Right now it sits at $200 and something dollars. But remember, the amount of Maker coins, there's only 1 million. This project for the BID staking and governance coin is 2.5 billion. So be aware of that. However, as we just talked about, in the other section where I said there is $1.2 quadrillion worth of derivatives, you know why they need that if it pans out. All right, stablecoin value is guaranteed to the fact in the case of a price drop of the Binance coin. I can maintain, sure. And that's really, then it kind of gets the same thing as MakerDAO. So I'm not going to go over the rest of it. You can read it, but what is the most important, let's go over the actual token offer. If you wanted to buy into this project, these are the stipulations. Let's go through all this. Okay. So first up, the operator is Bidao. So you're going to hear a lot of things called operator. The Bidao platform, as described for the detail, is operated by Bidao. It's an LLC under German law. Great. The ITO, or ICO, whatever you want to call it. This offer document refers to the proposed initial offering of up to, oh, sorry, it's not 2.5, 1.95 billion bid tokens as described below. The operator intends to offer up to 1.95 billion bid tokens during the period starting in Q3 2019 and ending Q3 2020. So we are in January, February, March, Q2 2020. So here's the procedure of buying tokens. You're going to go to the website, you're going to sign up, and you're going to pay for it in either Bitcoin, USD, I think Litecoin, and something else, Ethereum. So that's pretty much it. Then they're going to give you the tokens if you sign up, and they're going to hold them in a wallet that you have on the website. First, you have to register your name and your email. There's no like KYC. They're not going to ask for your backup documents, your driver's license, your passport. It's just your email and your first name and last name. After the payment is verified by the operator, the amount of tokens bought by the participant will be shown in the participant's account. At this moment, the coins are not transferable. The participant will receive transferable tokens after the ICO is finished in Q3 2020. Great. So here's the agreement. The payment of the bid tokens, the ICO, can be made in Ether, Bitcoin, and Litecoin. Yeah, what I just said. You click on the buy tokens and they send it to you. It's in your wallet, in your Bidao wallet. By accepting of the participant's offer, the participant and the operator enter the purchase agreement. The operator reserves the right to reject the participant's offer if there's any cause in his sole discretion. Notwithstanding the statutory right of withdrawal and the consequence of the withdrawal, in case the operator does not accept the participant's offer, the operator, Bidao, is obliged to reimburse the price paid by the participant without undue delay. For the purpose of reimbursement, the operator will use the same payment method the participant used for the initial transaction to be carried out, unless otherwise expressly agreed by the parties. The operator may reimburse a number of Ethereum, Bitcoin, Litecoin, or other selected payments. So if you use Bitcoin today, let's say you bought, I don't know, $6,700 worth of Bidao, which is essentially one Bitcoin. After Q3 2020, they will pay you back in one Bitcoin. Depending on, doesn't matter if the Bitcoin is worth 10,000 or 2,000, they're going to pay you back one Bitcoin, not the dollar amount. So here's the representations. The operator's limit is an LLC. Operator is authorized to validly conclude this agreement. The operator will undertake all reasonable measures to transfer legal property and access the tokens to be transferred under this agreement. Great. And the participant is not, this is important. This is the big thing. Representations and warranties of the participant. The participant is not acting for a third party, and any transaction considered in this agreement shall be effected by the participant for his or her own account. The participant is able and authorized to validly conclude this agreement. Participant is not a resident or otherwise subject to the jurisdiction of any of the countries of which have been expressly listed as excluded in this offer. The agreement shall not constitute a breach of any laws. The participant will undertake all reasonable measures to transfer legal property and factual access to Ether, blah, 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 blah. Okay. So the big thing is this. The participant agrees that an operator will distribute the tokens at latest 4 weeks after the completed ICO. Okay, so after Q3, you got to wait 4 more weeks. Down here. So in the past, legal regulations pertaining to cryptocurrencies and tokens have been implemented and proposed in various countries. Such regulation may render the use of this token offer document in any or all forms and or the participation in this initial token offering illegal. The operator has only assessed the lawfulness of this token offer or the ITO with respect to German and European capital market laws and expressly weighs any liability with regard to the laws and regulations of jurisdictions other than Germany or the European Union. What they're saying is you can only hold us accountable Germany or European Union law. And if everything else of that is fair game. Therefore, the initial token offering described in this token offer document is only open to persons and or entities whose participation in the initial token offering is in full compliance with all the applicable laws, regulations, and other legal provisions. So, here's who cannot be a part of this offering. China, Singapore, USA, Canada, Hong Kong, South Korea, Afghanistan, Cuba, blah, 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 Iraq, Libya, Myanmar, Palestine twice, wow, Somalia, South Sudan, Syria, Venezuela, Yemen, North Korea. So there you go. So here's the thing. if you wanted to be a part of this, by law, if you're a United States citizen, you cannot. They can reject your offer. They haven't done, as I've seen, any KYC type of procedures. But as the time moves forward and the Bidao is due to be released, they could just say, well, now we're going to do KYC. If you're in one of these countries, you have to prove that you're not in one of these countries. And if you are, we're going to reject it and give you back your whatever you paid for it. So, and then another thing I thought about was, well, maybe I could just do this and say, well, if I have family abroad, like let's say I have, I don't know, an uncle in Australia or something. But they said you can't do this as a third party. So that person would have to do it. So legally, you're kind of binded by this contract. Now, there may be loopholes and whatever else, but it seems kind of risky to me to do it. However, the project itself looks pretty good. If you think about, okay, there's a problem with the team. They may be a little bit young and maybe a little bit experienced. Well, so was Steve Jobs and Steve Wozniak. And they seem to do okay in Apple. So was Bill Gates. He did okay in Microsoft. So how hard do you think it would be if these guys were able to raise, I don't know, a couple $1 billion to get some good advisors on the board? Not too bad. And looks like they're ambitious enough. And as we talked about as far as decentralized finance, the type of opportunities that you have out there with the derivatives, with the different markets, with everything that's going on. Plus, they're leveraging the Binance chain and how Binance essentially said that, yeah, this looks pretty good. We can lock up some BNB tokens and they don't have anything else going on. I mean, why wouldn't they? So I wouldn't mind investing in it myself. Unfortunately, as an American citizen, it's not for me. So that's it. Thanks for sticking with me through the rants. Really appreciate it. This is a long video, so thanks for hanging out with me. And look, I'll see you on the next one.